Hello, Professor. Today I'm going to be supporting my thought process of shorting the S&P 500 index fund. There's an abundance of reasons why I think there is reason to be concerned about the health of the overall stock market, but in the interest of time, I will only cover a few main reasons why there is trouble ahead and why I decided to short the S&P ETF. I think the combination of the effect of supply chain disruptions, oncoming inflation, interest rate hikes, and other factors will ultimately crystallize the economic slump we've seemingly been waiting for. The economy goes where the consumer goes. The consumer drives the economy one way or the other. All the factors I listed lead to a consumer pullback that the Federal Reserve will not be able to overcome forever. They have done their best to push it off as far as they can, but the time has come where wherever we look, there is trouble on the outset. The market just realized their worst month since the COVID-driven plunge of March 2020. The fear of consumer prices climbing at rates not realized in over 4 decades, the fear of rising interest rates, and significant ones at that, are at a maximum. I stated previously in the very first video that the fear of the Fed needing to raise rates 3 times this year, as well as next year, is still prevalent. Statements by the Federal Reserve describe a target of a 2% increase in interest rates by July, which is even more dire than the expectation set a couple months ago. At this point, every time the Federal Reserve meets or puts out a statement about the landscape of the market reacts negatively towards it. It's for these reasons mainly that I decided to short the S&P index. With this much momentum pointing towards a market-wide downturn, it made for an options trade with a sufficient chance of success. I have it set for a month from now, around the end of the semester. In a real situation though, I would aim for a lower price in or around the month of August.